All right, hey there. Good morning, everybody. Let's see here. It is just after 11 a.m. Central Standard Time here on Monday, the 28th of December, 2020, in a very overcast San Antonio, Texas. I hope those of you that were celebrating had a great holiday time here, a great holiday there. Price doing a bit of a Santa Claus rally there for Bitcoin, which, again, always been the possibility. It's kind of making its way up toward 30,000. Is it going to make it? I don't know. We'll talk about that today, as we always do, and then look at some possibilities. Right now, I think we may have a little bit more of a pullback, but I think we do have a bit higher still coming in. So again, we'll talk about that. Who is here already? We've got Hank. What's going on? He says, happy last Monday of 2020. Yeah, I know, right? Everybody's like good riddance. But they always say it's better the devil you know, right? So what happens in 2021? Do we really think it's going to get better? Well, it can't get much worse, they say. Sure it can. Sure it can. Never tempt fate if you believe in those types of things by saying things like that. Hey there, Aeromat. Good to see you. Aramis is here as well. Good morning. Devin, what's going on, man? Saying thank God 2020 is other. And then Hank says we'll see what 2021 will bring. Yeah, exactly, right? Hey there, LG. Good to see you. Tell you, Ryder, what's going on, man? 'Tis the season of no more Christmas music. Oh, please. They still got... I think, as a matter of fact, I think they started putting up, Valentine's Day stuff already, right? It's just getting stupid, guys. This is going to be, Christmas starts in June. Poor Thanksgiving gets overlooked except for the day it happens, basically. It's like Thanksgiving Day is there, just because of Black Friday right afterward, which really isn't becoming much of a thing anymore with all the online now. These holidays, man, everybody running them all together. Let me see here. Crypto Mowgli, what's going on, man? Data's here as well. Gian, good to see you. I did have a great holiday. I think I need a break from my holiday. A vacation from my holiday when I was off there. Y'all ever feel that way? Hey there, Jordan. Good to see you, man. When expanded, flat, and validated? Never. No. Again, guys, here's the thing. Elliott Wave is mostly, Elliott Wave is very few rules. It's mostly guidelines. So, you have rules like, wave 2 cannot drop below wave 1. Wave 4 cannot drop below wave 2. Wave 3 cannot be the shortest. There's very few actual rules like that, hard and fast rules. Most of them are guidelines. And so when it comes to patterns like, an expanded flat, there aren't really any guidelines that say, at this point it's definitely invalidated. The way I generally look at it is, the further you get beyond the 1.618 extension, the less likely it becomes. That means, it's not like you'd say, it hit the 1618, so, it's invalidated now. No, it's not invalidated, but it becomes less and less likely. The thing is with Bitcoin, with Bitcoin's real strong movements, we often have over-exaggerations of waves. And so I tend to give, flats and things, we're talking about the big macro flat here, but even on the smaller scale, I tend to give flats a little bit more leeway, a little bit more leg room there, a little bit more leeway, just because, again, with Bitcoin being as volatile it is and is how it moves, many times it can go further than what you would normally expect if you're looking at Elliott Wave in another market. That's kind of the way we look at it. I'm kind of looking, I'm saying here, 30 to 33 is kind of, I'd like to see it prior to, basically 33. If we're getting beyond 33, to me, that kind of says, well, I think it takes a backseat more than anything else. It doesn't mean you can completely forget it, but I think then we continue to look it on. But a lot of it comes into how we read that movement coming up and what would be that wave be. How do we read that wave count coming up? I think that has it's going to have a lot more influence on it than the actual extension that we look at. So, yeah. Hey there, Esteban. Good to see you. Dirty Sanchez. Hey, good to see you checking in. Let me see here. Teddy Ryder says 2021 Texas population doubles. Man, it's already been, man. Everybody moving here, especially from California. Now all them big company guys want to move here. Joe Rogan moved, and then Tesla moving their foundation here, and then, what's his name? Over there, Ellison with Oracle, moving headquarters over here as well. A lot of crazy stuff. These idiots got to keep coming on here, putting their stuff there. You want a lot of followers? No, I'll take whatever I get. Let me see here. Who else is here? Let's see here. Is that Fickett Edge? Is that what that says? It says overcast in Vegas too. Man, I have not been to Vegas. I'm not a gambler. Some people have a hard time believing that because I trade. But trading, I don't believe, is gambling if you do it properly. So I haven't been to Vegas. I don't know. I heard there's a lot of other cool stuff there. Maybe I'll go sometime. Let me see here. Aluminum Systems Design and Manufacture. Hey there. Good to see you checking in. I had a lovely Christmas. I hope you did as well. Onyx King is here. Ali is here. Please cover the Bitcoin downtrend and the Ethereum or Litecoin comparison. I don't really compare all that. I think, people are looking for... the thing is, you see a lot of this comparison of Bitcoin with Litecoin and Ethereum to try to get an idea of where Bitcoin may be or what it's doing. But I think that's just people just trying to find something because, just trying to find something. But I don't think there's anything really there. I mean, other than the fact that they're all, in the majors and so they all kind of move together. I don't think there's a whole lot you can get off that, though, honestly. You'll see people say all of a sudden, oh, well, look, Ethereum was leading all this time, or Litecoin was leading all this time. But, nobody talks about that as it's happening. I don't really think you get a whole lot out of that. Hey there, Buckshot. Brian, good to see you guys. Hank says 33,000 is also the weekly R5, and we just got stopped on the R4. Yeah, I was talking about that this morning in Discord as well. Yeah, so we'll look at that. But let's go ahead and jump on it. By the way, guys, join us at howtotradetowin.com, and if you do, use the code WELCOME 2021. Oh, no, this is the wrong one. Wrong code. I typed too quick there. Welcome 2021. There we go. There's the code. That's what you guys want right there. Welcome 2021. If you type that in there, you'll get 25% off anything. So whether it's a month, whether it's an annual plan, whether it's tier 1, tier 2, tier 3, whatever, to get you 25% off. Jump on and do it while you can. It's our, goodbye 2020, hello 2021 kind of sale that we've got going on. So be sure to jump in there and grab a hold of that, guys. We'd love to have you in there with us. It's not because of me. It's because we got a lot of great members. It really is. I know I say that, but it really is, guys. Until you've actually been in there and you've seen, you really can't understand. But our members are pretty freaking awesome. So we'd love to have you in there with us. Here's where we're at. So last week, I left talking about the fact that we might have had a triangle going on here. If this is a triangle, then it's got a short E, and that's what I'm kind of working off at the moment here. Same idea. You got A, B, C, D, and then E here. And then that gave us a pattern target of around 25,815 there. Based on the height here of this triangle. And as you can see, of course, price continued up. As a matter of fact, it went up here all the way up to 28, what was that, 28,387 here on Coinbase. And after that, we had this pretty sharp, within an hour or so, we had about a $2,000 drop. A bit of a rebound, came down $600 more. Basically $2,600 drop there. Now, at this point, we've just got 3 waves down, it looks like. So right now, this could be the end of this correction. Price could be heading up. So the way I'm looking at this is that if we get a move above this swing high, I'm playing a lot more safer right now. If we get a move above this swing high, then we'll look for higher up. If we get a move below this swing low, we'll look for lower down. Now, if it goes up, we'll start up here first. If it heads up, we'll go jump this to the 1 hour here. If we get above this 28,387 kind of high here, my first thought is, okay, if this is a triangle right here, this is going to be, hey there, Deep Quantum Crypto, good to see you, good morning. If this is a triangle right here, if this is, then this is necessarily a wave 4. It's not any other wave. It's going to be a wave 4. You don't have triangles in other waves other than, connector waves, wave 4, wave B, wave X, okay? You don't have them in wave 2s. So if this is a triangle here, then this is a wave 4. Now, does that mean this is 4 and this is 5? Does that mean this is 4 of 3 and then, you've got 4 and you got a 5 still coming up. Does it even mean that maybe this count is off here? Maybe this isn't a 1, 2, 3, 4 here. Maybe this is a 1, 2, 3, 4, 5 to finish your first 5 up here. So those are the kind of things we're looking at the moment here. And so what this means is if we get above this swing high here, then the first target I'm looking at is the R1 pivot here on the 1 hour, right there around that 29. Sorry, man, I got these these allergies going at the moment. Hey there, Teo. Good to see you. We've got this initial target up here of around 129 here, this R1 pivot. And then, of course, 30,000. Now, we're up in price discovery, guys, which means every time we're making a new high, it's a new all-time high. There's nothing to base, support and resistance on after that, really, other than extensions. So fibs or pivots. And then, of course, you should be looking at your round tens numbers. So 30,000, 40,000, 50,000. 35,000 is a good one as well, 45,000. So looking at those again, you get the R1 pivot, and then 30,000 would be my 2 upside targets immediately here. And my thought is, if we're doing that from here, rather than coming down lower first, then that means this is most likely a 1, 2, and instead of a 5 here, this is actually a 3, a 4, and then we'll have that 5. Now, if that happens, then we should expect, again, that would be, again, is this 4 and then that's 5? If it is, that's the top. We should expect a strong move back down. However, it could just be 4 of 3. So, 3, 4, 5 gives us 3, and then we'll have 4. So that larger 4 pullback is likely to target this wave 4 of the lesser degree here. That's usually what happens. When you have a wave 4, it usually pulls back to wave 4 of the lesser degree. So your wave 4 of 3 is usually your target area for your wave 4. Okay? So then we'd be looking at it to come down here maybe about 23,100. If it goes down below that, then potentially the demand structure EQ here of 22,065 or so. Now, again, this could be, 3, 4, 5 of 3. And this is still wave 4 here playing out, in which case we're still looking at the same targets. We're still looking at 23.1, followed by then this potentially this 22,065 at the demand structure EQ here. If you drop them below that, then it starts opening up the possibility this may be a much more definitive top. But we're having, we're really kind of just goofing around here a bit. We're not having a lot of strong follow through right away. So I'm thinking we still have further upside. Whether we come down here first and then go up, or we go up a little bit more, then down and then up, I think we've still got some more upside. So what am I looking at locally here? Well, right here, you can see I have a couple of support lines. We dropped through the first one, rechecked it as resistance, came on down to the second one, just dipped below it. And now around it here, what do we have? We have price, again, dipping below, stopping just above, stopping just above, stopping just above. So you're getting a lot of touches in this support area here. And right here, you're getting, your highs are getting shorter. You're getting shorter highs here. So it seems to me that there's supply pressure coming in. It may push it down through that. So a push down, through this ascending support here, maybe the first clue that we're going to have further to go down. So the first thing we're going to look at is a target of this demand structure EQ here, 25, what is that, about 25, 920 or so, I guess, 930, right around there. And then we're looking for, if it continues on through that, what we're looking for is a decline and close below this 1 hour pivot. If we can get that, again, that looks like overall we're heading down here toward the 23,100 and potentially even down here at 22,065 kind of area. So that's what I'm kind of watching. I mean, if we break this down into closer and closer time frames, that's how I'm watching it. Ultimately, it's, are we getting above this swing high or this swing low right here? I mean, that's really what it comes down to overall. Everything else aside, this is your range. This is what you're looking at. But if you want to see if maybe you want to try and get in a little bit earlier than waiting for this breakdown over here, you can look for a breakdown of this support. Now, if you break down in this support and it comes back up, your stop loss should be right above this swing high here. This is a 27,477 here. Because if it breaks down through this and then pushes up above that, that kind of invalidates this support area. It doesn't mean that price is necessarily going to go up and make a new high, but it means that what you're looking at, this support area as your reason for entering, a breakdown of that, becomes invalid at that point. So you definitely want to get out if you're about there and look for another entry. That's the way I would play it. But again, looking for a decline through that to this demand structure EQ. If we can drop down through the bottom of that demand structure through that swing low there, then all we need to see really is a close down below the pivot here, and then we start looking, okay, potentially further down here. But again, if this is a wave 4 here, then that would just make it like an A, a B, and a C coming down. I think we've still got further upside. I think we may still have, even if it's a little bit, I think we've still got some. Let's see here. Yeah, exactly. Blue skies notoriously hard. Yeah. And again, something that I continue to remind traders of, because they hear me talk about new traders have a lot of hard time with this. You hear me talking about this big macro idea and you get scared. And so you can't seem to trade up. Well, guys, the trend is your friend until the end, okay? When I talk about the big macro potential reversal, that's going to take more confirmation, a larger move for confirmation. So you can continue to play that trend as it moves up until you can't anymore. But this is why, again, you have to go to your risk management. Your risk management continues to be the place where you guys are going to make money. If you guys have not learned that yet, the market will teach you that in the inverse, because it will take money from you again and again and again until you get your rear end in gear and really work on your risk management. There are no guarantees in trading, guys. Trading is speculation. The markets are speculation. You are a speculator. That means, by default, the definition of a speculator means there is risk. Okay? If you don't know how to intelligently deal with that risk, you're going to lose money. That's all there is to it, guys. This is not simply, I'm going to put in money because it's going to go up forever. That's what retail always thinks with all markets, and they're always shown wrong at some point. And the problem is they never learn to actually trade it properly with risk management, and so they don't know what they're doing when they try to navigate that reversal. Don't be like that. There's enough other traders out there. Guys, listen, my channel is really small. There's very few of y'all who actually listen and come in here. So it's not like we're telling you anything that people are really going to listen to as it is, and is going to change the market structure, the market dynamics. There's enough people out there giving the money to the market, guys. You don't have to be those people. You can be the one who uses that liquidity rather than be the liquidity. And that's what you want to do, okay? What do I think about an ABC expanded flatware? What time frame are you looking at? Oh, sorry, man. I'm really dry throat right now. So, this is kind of where we're at here, Now, a lot of people you guys are going to follow on crypto Twitter and other social media. They're going to make trading sound really easy. Everybody's a genius in a bull market, guys. Okay? Everybody's a genius in a bull trend. But don't ever forget that. I guess I could say everybody's a genius in a trend is what I can say. Because, it's just a continuation of movement in one direction. But usually what you find is those people have the most difficulty when it comes to reversals. And they'll scream at you to continue buying dips even though, a reversal has come in. So I just want you guys to be careful out there, with who you're following, listening to. Understand what's going on. That doesn't mean you can't make money, guys. You can't listen to people and whatnot. But what you're doing here is serious stuff. This is real money. Treat it like it is. Don't. I hope to God if somebody came up off the street to you and said, hey, listen, you need to buy this stock with everything you have. I would hope to God you wouldn't go in and buy it with everything you have without doing some homework and understanding what's going on. But yet, that seems to be the thing that's going on with Bitcoin. Everybody's scared they're going to miss what happened in 2017. But that's a recipe for disaster, guys. Listen. The truth is, right now, what we have is we've got a lot of people screaming 400,000, $1 million by the end of next year. That should already get you as, wow, that seems really excessive. We've got calls for $10 million in the next couple of years. This is all, it clutters up crypto Twitter right now. I bring this up because trading is all about emotions, guys. I keep trying to explain this. Markets are not efficient. The stock market, forex market, crypto market, commodities markets, they're not efficient. They're also not rational. They're emotional. And so your job as a trader is to understand what that means. What does it mean when we say that the markets are emotional? How do you define emotion? How do you define the extremes of emotion? And a lot of times this is something you have to go through a few times before you get it. It takes a few market cycles usually to really start to understand it. Right now, there's an awful lot in all the markets, whether it's stock market or commodities. People still think gold's going to 5,000 in the next 2 years or whatever next year. People think Bitcoin's going to 400,000 or more by the end of next year. People think the stock market, they're talking about the articles recently, articles like on, I don't remember what it was. I don't think it was Barron's. It was like maybe the Wall Street Journal or something. And they were talking about, Bitcoin stock market at 100,000. These things, guys, when people talk like this, when the sentiment is this extreme, these are usually indicative of tops. These are typically indicative of market tops, not market bottoms. Bull markets are born on despair. People don't believe it's going to continue higher. They believe it's going to continue back down. That's a sucker's rally, all this stuff. And so, the fact we are where we are, and we've got these huge, huge calls here, and everybody telling you you're stupid if you're not buying Bitcoin right now. I mean, this is all emotion, guys. And you have to be able to discern between that and what's really potentially going on. That doesn't mean price can't go up. But that means that if you're buying because you're emotional and you're believing all this stuff without looking at any other possibilities of what may be really going on, you're kind of doing yourself a disservice. I'm going to tell you right now, if the dollar reverses, Bitcoin and everything else is going down. That's all there is to it, guys. And if you don't understand that, it's because you don't understand how the dollar, how currencies work. Okay? And right now, the second most crowded trade is short the dollar. It's 92% bearish sentiment right now. If you've been in the market, in any market for any length of time, you know that markets don't get off sides like that and stay there. When they get to extremes like that, where they're 80, 90% on one side, they usually reverse pretty harshly, pretty strongly. That's important to understand in the case of the dollar, because when these other countries have debt to pay, have U.S. debt to pay, they have to pay in dollars. And so the stronger the dollar goes up, the more expensive it becomes for them to pay. This is the problem. When you're running credit, guys, when you're running when everything is this credit bubble and you're running on a debt-based economy, you have to be able to pay your current debt with cheaper dollars. When that changes, there's a rush to get those dollars before it shoots up, which causes it to shoot up. There's a liquidity event. That's what happened in March. If it happens again, it's going to be longer and stronger. We know, based on interviews that have been done, that you can find on the internet right now, these big guys who are getting in Bitcoin, or at least saying they're in Bitcoin now, are all saying, listen, we're in it for fear of a possible inflationary event on the US dollar. What they're saying, if you guys are listening to that, is, hey, if the dollar does anything else, we're out. We're only getting in here to protect ourselves in case, there's some strong inflationary event. But if we don't get that, and heaven forbid we get the opposite of that, we get deflation of some sort, There's no reason for us to be in. We need to get the heck out. Now, why is that important? Because all of a sudden, all these big names that you guys are all excited about getting into Bitcoin become a liability. All of a sudden, all that Bitcoin they hold becomes potential supply pressure. And if price drops strong and hard, even at the beginning, it's going to mean there's less people to buy. You go, oh yeah, people are going to keep buying up the dip. No, probably not. If these people with the big money get a feeling that, you know what, there's going to be a large correction coming in, they're not going to buy the dip. They've been buying the dip, guys. We talked about it. We chronicled it coming up from 3,000, 3,100. How institutions were the ones buying on the way up. They've got a ton of supply, guys. If they're selling out here, they've been buying up since 3,100. They're in a lot of profit right now. So if they can't sell everything all over the, OTC, over the counter, they're going to have to go to the exchanges. It's a lot of supply pressure coming in on the exchanges, guys. So if you don't believe it can get down, or you don't see how it could, understand there's where it goes. But, again, in order for all that to really happen, you need the dollar to go up in value. But again, where the dollar is in terms of sentiment suggests that it's likely to do that much sooner than later, as we've been discussing. Just because markets don't stay that offsides that long. Not especially to this extreme. Remember, right now, the three most crowded trades: long tech, second is short the dollar, third is long Bitcoin. So you got to be careful in trades that are that crowded. Let me see. Let me catch up with you guys here. Yeah, so we still got, that expanded flat is still the possibility right now, TV canal. Sorry, I see that's an L there. The macro at the weekly chart. Yeah. I mean, that's still the thing we're looking at here. We're still looking at a possible A, B, C here. Now, as it gets toward 33,000 here, it becomes more possible that we may just get like a running flat. And a running flat just basically means we would see price kind of doing, this thing here goes up here, finishes out for B, and you get like an A, B, C, or whatever coming down to like this area. And then you head back up. So you get a running flat rather than an expanded flat, which would get you this kind of 1, 2, 3, 4, 5 type idea, whatever it hears. So expanded flat gets you this wave C below where wave A terminates. A running flat just gets you your wave C termination within wave A. And if it's going to do that, it's probably in this area right here where we have all this confluence of activity here. Potentially, 9,000 there, 9,100. Could be, it could get down here maybe to, 6,500, 7,000. It's this node here is where we'd be looking at as just as I did 3 there. It shouldn't be 3. It should be, again, 5. Same idea. 2, 3, 4, 5, or whatever. So we've got to see it as it comes on down here and how it plays out, to which one it may be. But again, the possibility for it getting down here is definitely not that far-fetched, guys. Especially, again, if the dollar reverses like that. Let me see here. Let's see here. Let me see. Teddy Ryder says, when speculative money is made by new traders, it usually doesn't get respected. Don't lose sight of how long it would take you to save that money normally. Money flees disrespect. Yeah, exactly, guys. You absolutely have to, guys, listen. I think there are a couple of requirements to be a successful trader. I really do. I think one is that you can't be a victim in life in general. You have to believe that you have control over your life. If you don't believe you have control over your life, how do you believe that you can actually, make money in the market, right? I think that's definitely the first thing. But the other thing is you have to respect your money. I used to talk about this a lot more. I'm going to start talking about it a lot more. You have to respect your money. In order to have the dollars that you have in your hand, you had to do something to get them. I hope to God you didn't rob or cheat or steal from anybody. But for most of y'all out there, it's going to be that you either had to work and or you had to spend your time in education and then work. I mean, you had to give up something to be able to make that money. Give up something that maybe you wanted to do instead. You'd rather be at home playing your video games, but you got to go to work instead, right? And so you need to have respect for that money. That's money that you traded time for. You'll never get that time back. And I think you really have to kind of come to terms with that. Really, honestly, get that in your head. And then that way you've got a chance at maybe... Because here's the thing. If you respect your money, then you're going to take risk management seriously. And if you take risk management seriously, and you limit your losses accordingly, as we discuss and teach over at TWC, then it's really hard to lose all your money in the market, unlike what you may be doing now, which is when you take these big, huge losses consistently. So yeah, it's you've got to have respect for your money, guys, because your money won't stick around and respect you otherwise. All right. Thomas Payne, what's up? He says, where do we go from here? It's a little tough because I felt like you said what has happened wouldn't happen, yet a lot of money was left on the table. Personally, I think when FOMO hits, that's bad. Yeah, we've got FOMO right now. Again, FOMO described as what I was talking about going on in crypto Twitter and whatnot. I think the greed index, the fear and greed index is like at 93 or something. It's been there for a while now. It's really way up there, out of 100. There's keys in all this. But I think if you're just looking at the Bitcoin market, I think it's easy to get caught up and miss the bigger picture. Look at what's going on in the stock market and commodities and everything. I mean, if you look at all these things that are going on, they're talking about how money managers are looking for risky assets to stick their money in because they're looking for returns. They need to get returns that they haven't been getting. The market rarely rewards when everybody is looking to make money off it. That's those extremes. So you have the little guy, you look at those put call ratios for stocks, which are at, the insane levels, right? The highest levels they've ever been for the small trader and the larger traders. Everybody's going long. Well, who the hell's going, who's left to go long, guys? Again, everybody's bearish on the dollar. Well, I'm sorry. Does that mean it's got to go down forever? Because that isn't how markets work. Usually, if everybody is one way in a market, the market turns and goes the other way. The market doesn't stay at extremes like that. It can't. Somebody always comes in and takes advantage of it. So I think when you look at all these other things and then also look at the Bitcoin market, I think it paints a better picture. The Bitcoin market, it's, again, guys, especially if you live on crypto Twitter, it's easy to get sucked into all the emotional exuberance and, euphoria and everything. But nothing's really supporting that right now, guys. Again, the big narrative, even by these bigger accounts who are on crypto Twitter screaming, oh, the dollar or the Bitcoin's going to 400,000 by the end of next year. They're saying it's because of inflation. So what happens if we don't get it? All of a sudden, everything they're telling you is wrong. But most traders don't recognize that. They don't know. They don't understand inflation and deflation and QE, and they don't understand credit contraction and credit cycles. So they just get hurt because they don't know when to get out. And they're greedy, so they want to get out at the absolute highest price. It's a bad combination, guys. It's a bad combination. Excuse me. But yeah, so there's a lot going on here right now. Excuse me. Again, as we've talked about, Eurozone's in deflation, China's in deflation. They don't want those things, just like the U.S. doesn't want it. So they're first in, they're fighting it right now. And, what goes on with the U.S.? I mean, places like China, they've got reason to devalue against the U.S., especially in terms of debt that they've got to pay in U.S. dollars. Is it going to happen? We'll see. But the fact that most people are not even looking at this should be some clue to you to kind of pay attention. Let me see here. RSI's at 92, not good to buy long. Yeah, I mean, it's dangerous trying to get long right now. And that doesn't mean it can't go up. And see, here's the problem. As new traders, you often come in here and you go and you look at that and you go, man, that RSI's at 92. Man, I think it's kind of stupid to get long. And so price goes up $2,000 or $3,000 and you go, oh man, I screwed that up. No, you didn't. You actually played it intelligently. When you have these indicators at these extremes, again, that doesn't mean that things are going to reverse right then, but it means the likelihood of them reversing sooner rather than later is a lot stronger. And where exactly are they going to reverse when you're in this all-time high price discovery area? You don't know. If you had gotten in and price dropped on you, you'd be all upset that you got in. But instead you didn't get in and price goes up and you're all upset you didn't get in. But you got to recognize that you were being smart about your entry at that point potentially. Especially if you're not a great trader, especially if you don't know what's going on. It's, it's really, ill-advised to buy, with RSI so high. But see, if I say something like that and it goes up, they'll be like, oh, you were wrong, it went up. No, I'm not saying it's not going to go up. That's the thing. It's just really, really dangerous to buy at those higher highs. You may get lucky, it may continue going up. But even if it does, do you know to get out when you should? Or are you going to ride it up and it's going to drop hard and next thing you know you're underwater and you're not going to get out because, oh my God, I lost all that money. Well, you didn't lose anything. You never locked in that profit. I'm telling you guys, the most difficult part about trading is dealing with your own emotions. That is the most difficult part of trading. It's not this stuff. So what's going on up there? Let me see here. Chris Day says most people here would not understand what an efficient market means. Yeah, well, that's true. That's true. Yeah, it was my comment earlier about how markets are not efficient, how they're not logical. How they're not rational. They're emotional. Yeah. Let's see here. Dana says, I will never forget buying XRP at $3. I will not repeat that mistake ever again. This is for me a war zone until I'm better equipped. I just wait for a serious confirmation on what's going on. Yeah, guys, if you change your mindset in trading from making money to developing a system that works consistently, if you can get to that mindset, you're going to have a lot more success overall. You're going to make a lot more money overall. As long as you're consistently just looking at, buying or selling kind of haphazardly on there without some kind of system in place, you increase the odds significantly that you're going to lose money more than make it. So, yeah. Thomas Payne says the U.S. can't continue going into debt and printing dollars the way they are and think the dollar will reverse. The Biden admin will go full lockdown and hurt the dollar more. I just don't see it. Well, that's just a misunderstanding of what's going on. I mean, right there, you're misunderstanding QE and how QE works. Most of that money that's printed in QE goes into the Fed Reserve for the banks to use as reserves. It doesn't get touched. It doesn't go into circulation. And if you're not adding that dollars into circulation, guess what? There's no inflation, right? You get inflation from dollar creation that goes into circulation, and that comes through creating loans. We're in a credit. We're a debt-based economy. We grow via credit expansion. So the way that we get more dollars into circulation is not printing through the Fed. It's the Fed encouraging the bank to make new loans, which creates new dollars that are in circulation. That's how it works. So when you look at the money that the Fed is printed for QE, well over 50% of that sits in the Fed Reserve and is never going to be touched. It can't be touched by law. It just sits there. It's there for the banks to use when they make loans to show the government that they have reserves. That's what it's there for. But the banks have to go and make those loans. But we already know from what I've shown you guys over the last 6 months that the banks aren't doing that. They've tightened their credit requirements. The Fed's trying to get them to loosen the credit requirements. They've actually tightened it. We know that personal and commercial, corporate, industrial credit is all shrinking. It's contracting all through 2020. So contracting credit is necessarily deflationary. You have, not only do you have not any more dollars being printed, but those dollars that were printed are coming back into the banks. Just sitting there. They're not circulating. There's no inflation. Well, not like what everybody thinks anyway. Again, everybody just looks at, all these dollars were printed, so, all this inflation. That is completely 100% the wrong way to look at it. That's the incorrect way of looking at it. For, just based on what I just told you right there. I do think that I do know that I agree with you about Biden. Biden wants to lock down, especially if this coronavirus, this COVID continues to kick in. He's been really antsy about getting a 30 to 60 day lockdown at least. Now, like I've said before, his couple of top aides have told him, listen, don't be an idiot, basically. Don't do that. But, I don't know. I think if he gets the chance to do it, he's going to do it. And what's that going to do? Again, it's going to hurt those very few, those businesses who are holding on by a string right now. They're going out of business. And when you look at debt deflation and debt deflation spirals and stuff, I mean, you take in all the corporate bankruptcies, which again, we're at record levels at right now. It gets into real estate. Again, corporate real estate is tanking. Personal real estate right now, I think is about to hit its top. And so that should tank as well because that becomes foreclosures. All these foreclosures and bankruptcies cause prices to drop. So you got prices dropping and the value of the dollar rising at the same time. It's a double whammy for the economy. Bad. Because prices are getting lower and you go, but that's a good thing. Well, yeah, it's a great thing for the people. They can buy more and whatnot, but then they don't go and spend because they're worried that things are going to continue to get worse. So you've got an expanding dollar. You've got a dollar that's increasing in value, which makes everything else held the same, held equal. It makes it cheaper to buy things. And then you have everything also dropping in value because of all the foreclosures and the bankruptcies and all these things. So you got a stronger dollar and declining prices. It's, the economy needs expanding credit because the economy is debt-based. Understand that. We are in a debt-based economy. In order for it to continue to grow, we have to have credit expansion, which we don't have. Matter of fact, we have the opposite of that. And so once it breaks down, that's it. The whole cards come tumbling down thing. Let me kind of catch up with you guys here. What's going on, LXT? You didn't notice we have a stream today, man. Shame on you. Let me see. Hey there, Layton. Good to see you. Checking in from a chilly London today. Let's see here. A lot going on in the 1 minute chart, Paul. Always is. A lot of noise more than anything else. 1 minute chart, a lot of noise. I think, again, shorting, I think, if you're looking to short this prevailing trend, again, it's going to take some bigger movements here on these larger time frames. But, let's kind of zoom out a minute here and here's the reality of what we're looking at. We're getting this straight up here, which is similar to this and this right here. When you have this strong, fast move up, you're going to expect when it does correct a strong continual push down at first. So, again, looking back over here, for those of you that 2017, you had this strong drop here, bounce back up, strong drop again, bounce back up, strong drop. This is what you're going to see. Until then, you've got to be careful with it because it's going to continue, it can continue to push up higher there, even right here. It went up here to, what was that? This was June of 2019. It hit 13,868 here on Coinbase and immediately turned around and hit 10,300. So that was a 30-somewhat% correction in a day right there. Bounce back up, another drop there. Push back up here again, another big drop. We don't have that yet. We have little catches, continues up. So right now the trend continues to be up. So you've got to be careful if you're looking for a big reversal. Now, locally, you can zoom in on your 1 hour and kind of look in there and maybe get an idea of where, again, you can short and whatnot. I gave you guys some ideas here based on what I'm looking at. But none of this right here says that this is definitively a top right here. As a matter of fact, like I said, I think until proven otherwise, I think we've still got higher to go right now overall. Now, does that mean we're going to get down here first to 23,000? We'll see. But, again, the reality of it is, we jump into the weekly. I mean, this is our move up, guys. This is it. And, it can't move indefinitely like that. It'll find a top. And when it finds a top, because of how strong this has been moving up, you should get a strong reaction the other way. Now, again, that doesn't mean it has to come on down here. It's possible, but it could just be a deeper correction, just a local correction here. We'll have to see how that plays out, how that price action plays out, how that movement goes. So right now, again, your trend is up overall. So you kind of play that. Locally, you just look and see right here. Are we getting that move above that swing high, or are we going to drop down below this swing low first? If you get above that swing high, you can go long there for a bit. If we drop below the swing low, you're probably looking a few $1,000s lower before you go long again, at least. Again, there's nothing saying this can't be a macro top here. There's just nothing here saying that it is yet. So you have to assume that the trend continues up until that point. Let's see here. Let me kind of see what you all up here. What's my bear plan at the 4 hour, if you get it? At the 4 hour. Well, it's the same thing. I mean, it's just what I talked about on the 1 hour chart there. Like I said, if you're dropping below that swing low there, I'm looking down at least around 23.1, if not 20,065 here. If you want a quicker entry on something like that, maybe look at a decline through this and a close here below this ascending support. But then your target is only locally right here, to this EQ. It has to continue on through that to say, okay, the lower numbers. Because this could just be, I don't know, maybe this is a 1, 2, 3, 4, 5 here. And so then you get into 1, 2, 3, and then goes up higher. So it really just becomes this swing high, this swing low. And that's a pretty big range. And most traders aren't comfortable with that because they want to get in now. What they see is, if I wait for it to get above up here, then I'm going to lose all this potential profit here. Yeah. Or if I wait for it to drop down through here, then I'm going to lose potentially all this profit here. Yeah. But that's the way it is. Just because you don't like it, just because it bothers you, just because it frustrates you, doesn't mean that it isn't the way it is. And I think traders need to get that through their head. Because otherwise that impatience, which stems from emotion, means that they end up getting in before they should. They might go long right here, and then it drops and continues dropping. They continue to tell themselves, it's going to turn around. It's going to go higher. It's going to go higher. Lower, 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 lower. Oh, it's going to go higher. It's going to go higher. And it keeps going down. Next thing you know, they're liquidated or finally exiting, at a strong loss. Or again, the same thing the other way. They shorted here before it actually gets below this area here. So it comes down, they're like all excited, and then it turns around and heads back up, and then they continue not to get out of it. It continues to go up. That money will eventually make its way into the economies next year, and then you will see inflation. You talking about the dollars that were printed? No. Those dollars that are sitting in the Fed Reserve they will not go into Circulation. They don't circulate. Once they're in that Fed Reserve, they don't get touched. They can't get touched by law. Once money goes to that Fed Reserve, it sits there. Again, that is for the banks to use as, because the banks have to have a certain level of reserves compared to what they're loaning out. And so earlier this year, those of you that have been paying attention know that for the longest time, the Fed's mandated, okay, banks only have to hold 10% of reserves. So if they had $100,000 in deposits, they could make $1 million in loans, right? 10%, right? But earlier this year, with the pandemic and everything, the Fed said, don't worry about that. You don't have to worry about your reserves. Make loans. And then they came out with QE, and they took that money and they stuck it in the Fed Reserve because that is there for the banks to, on their paperwork to the government, just so the government knows, because they have these federal charters, that, hey, we've got this reserve here so we can make these loans. That's how it happens. The Fed doesn't actually give dollars out. That money doesn't go into circulation. The only way that money makes circulation is if it results in banks creating more credit, expanding credit, which means people have to actually come in and get loans. So, that money that's in the Fed Reserve, which is most of QE, just sits there. It won't make it into the economy. People have to start taking out loans. They have to expand their credit. They have to stop paying down their debt. As long as they're doing the opposite, deflation is more likely than anything else. Do I think the institutional investors are just courting a massive dump on retail? No. Just because people have money doesn't mean that they're smart traders, guys. All right? And you have to remember, those that are really large here, John, Tudor Jones there, and others, mostly like him, Bitcoin is a part of a bigger thing that they're dealing with. They're looking at all the markets and the economy and all this stuff and dollars. And so they've got positions in currencies, and they've got positions in other asset, risk on and risk off assets and everything. It's just part of their big, huge thing. But again, the same idea is that just because they have a lot of money doesn't mean they all see, even if they are good traders, they don't all see the top of the same place. Just like not all retail traders see the tops and bottoms of the same places. So I don't think there's any kind of coordinated, we're going to dump on everybody type thing. I think it's a bunch of silliness. But it sounds logical to new traders because they don't understand how things work. But I don't think so for sure. Yeah. I know you think deflation followed by stagflation at this point, but is there any way you see inflation? Not right now. I find it really difficult. The only way I see inflation, again, is if people go out and take out loans and whatnot. But they're not going to do that because the economy sucks. Pandemic coming in again. Everybody closing down again. Biden coming in, and Biden's itching to close down. People don't want to put themselves out there right now, which is why the entire 2021, like I said, credit has been dropping. Credit's been contracting. Less and less loans being taken out. They can't even get people to take out loans now. And not only that, but the people are paying off the loans that they have. Paying them off with them cheaper dollars right now. Yeah. The only way I see inflation is if you get credit expansion, and I don't see that happening at the moment. There's no incentive. There's really no incentive for the banks to do it right now with the economy the way it is. There's no incentive for people to do it with the job. Remember, the job growth? The job growth has been in those high school diploma jobs. But there's actually been a decrease. There's been a contraction in the white-collar jobs. Why is that important? Because your white-collar people are the ones that have the disposable income. And their jobs are their jobs are getting canned. The high school diploma jobs, those people are just barely making it by. They can't afford to go out there and just spend willy-nilly. So who's out there to spend? Let's see here. Let's see here. kind of catch up with you guys here. Tyler, yes, exactly. Technically against Fed rules. There's nothing that can that stops Congress from changing those rules. But until they do, direct Fed payments are not legal. So they're not going to happen. Yeah. Can the bank use the Fed reserves to buy more government bonds? Seems counterintuitive. The loan government bonds to the Fed to buy more. But is it possible, and would that have an effect on inflation money in the circulation, if this makes sense? Yeah, no. Again, the Fed reserves, the money is not touched, guys. You have to understand. It sits there. The only thing it is there for is for banks, when they're making loans, to be able to write on there and say, okay, well, we have the proper reserve requirement. That's all it's there for. It's just untouched. It just sits there. It won't be used for anything other than to say, hey, we've got the reserves that were required to make these loans. But again, nobody's taking out loans. It's contracting, as we've shown. So yeah. So I mean, yeah, that's not going to happen there. But again, the whole thing is, if that dollar goes up, all of a sudden, all this U.S. debt becomes more expensive to people holding it. They now have to pay it with more expensive dollars, which is why you have that run-on liquidity event. There's a run-on dollars usually in that point, which, again, what happened in March. So, there's a lot going on here that most people don't understand because they don't have a desire, much less, they don't have they haven't learned it, but they don't really have the desire to understand it when it comes to QE, monetary, macroeconomics, macro financial policy and what that does and whatever. And the reality of it is, guys, a lot of what we talk about is based on the way things we think they should happen. Again, what the Fed is doing right now is not even exactly, with QE, is not even exactly what Japan did in the 90s. Everybody's like, oh yeah, look, Japan did this in the 90s, they're fine. Well, what the Fed's doing is actually something a bit different. And so, again, all these larger things, we don't really know how everything's going to work out. We do our best to figure it out based on what we know about how things generally tend to work. But again, guys, for the past 20 somewhat years under, that started back there with Bernanke, the Fed believed that you couldn't have deflation and low unemployment. And yet you did. So their theory under Bernanke is completely out the window now. So they're trying something else. Make no mistake, what the Fed's doing right now, they don't know if it's going to work or not. They're hoping it does. They think it might. But they thought, again, the way they were doing it prior was going to be working, and that didn't. So, yeah. Onyx King says, my simplistic view is the following. The rich own most of stocks and have a liquidity preference. This means that when the party is stopping in the stock market, they will fly to the dollar, which might create quite a large dollar shortage. These dollars will not go into the economy. They will stay with the rich until they have other opportunities to deploy them in financial markets. That's not too bad a look at it. I see a lot more truth than not in that. Yeah. Hank says, where would the money go if not in speculative assets? It's going to go wherever it can go. But it's not going to, if it's speculative assets drop, they're not just going to sit there in it and take the loss. They're going to go to bonds. They're going to go to treasuries. They're going to go to the dollar. If that kind of thing happens. The same way it always does. I mean, it's not like, oh, well, we've got to find some place where we can make some money. No, at the end of the day, if your cycle is at the point where you can't make any money on those things, it's going to, in your speculation, your very risk-on assets, can't make you that money. You're not going to sit there and sit in them. You're going to take your money out and just try to preserve that wealth better than everybody else. And that way you can say, yeah, well, you know what? The economy tanked and everybody else had, 50% losses and we only lost, 20%. We did that much better than everybody else. You need to come put your money with us. But, yeah, I mean, that's just the way it is. Let me see here. He says, yes, that's the question. Where can it go? The loss they will make if a stock goes down 30% is less than the profit they made by staying in. the loss they will make if a stock goes down 30% is less than the profit they made by staying in. Yeah, if they had over 30% profit, yeah. And if their decline is a 30% loss, yeah. If they went out the previous all-time high, yeah. Again, guys, it's just this idea that money has to go somewhere doesn't necessarily mean it goes someplace where it's going to make money. If there's nothing left, guys, it's going to go where they can protect it, or where they assume they can protect it. It is what it is. But when you have the bond guys right now ringing warnings, you should be paying attention. Nobody's listening to them. Your bond guys are out there saying, listen, there's some funny stuff going on right now. This is not going to work out. This is, this looks more like a top than anything else. These are the guys that play the other side of it. Nobody wants to listen. They never do until things happen. It goes. Let's see here. Problem is that there is negative interest also on bonds. Yeah, I mean, if you've got negative interest on bonds, yeah, what are you going to do, right? I mean, you get depending on what your interest rate is on your bonds, that'll affect your bond price. But, again, a lot of people are going to fly to the dollar. I mean, if everything else is dropping, the dollar's where it's at. That's where people are going to go. I mean, it doesn't make sense to do anything else. So, everyone's got an angle. Exactly. Yeah. Everybody's got an angle. Anyway, guys, I got to get out of here. I'm 10 minutes over here. Really appreciate you guys joining in. I will be back Wednesday at 11 a.m. Central Standard Time if you guys would like to join in. Don't forget, you can get over here on howtotradetowin.com and use the code here, Welcome 2021, to get 25% off any of our tiers, any of our subscription links or whatever. By the way, when you go to the checkout page, it'll be listed on there. You just have to click it. It'll say Welcome 2021, little coupon thing there on your checkout page. Just click it and it'll apply that coupon. You don't have to actually type it in yourself. But I want to give it there just in case. So that way you guys have no reason to say you didn't know it's in there. But anyway, we've got some cool things coming out for you guys in Q1 of next year. I've got something that I'm working really hard on. I'm really excited to launch. And so hopefully you guys will be around with that. Guys, I want to say something about it right now, but I'm going to keep it under wraps for the moment. A lot of exciting stuff though coming on, guys. Just, like I said, all this is possibilities. Nothing is guaranteed. But again, if you're in the market and you see the market doing something that usually results in a specific action, there's no reason to think that, it'll be different this time. Okay? So just be careful out there. Pay attention to what's going on. Like I said, I think the dollar still got a little bit further to go down here. The final, finishing that move down, which means, Bitcoin could have further up and everything else. The only way the Bitcoin would go up if the dollar was going up is if there was enough demand to outpace that supply, that price pressure coming from the rising dollar. That's the only way Bitcoin's going to go up. But it's got to go up. It's got to go up like twice uphill now in that situation. Not only does price have to go up like it would normally have to go up, everything else held equal, but then it has to go up in the face of increasing price pressure to the downside via a dollar rise in value. So it makes it even more difficult for price to go up. It's not saying it can't. Bitcoin's still a small market. But that's what it would have to do. It's not going to be an easy day at the park type thing if that were to happen. So just keep paying attention to that. Yeah, no. I'm going to be on Wednesday. I'm going to be here Wednesday. We're going to close half a day on Thursday, and then we'll be closed Friday, for New Year's. I've got giveaways coming out on the New Year. Like I said, we've got something else I'm going to be launching as well. So a lot of cool stuff going on. So you guys just keep showing up, keep paying attention, all right? Really appreciate you guys checking in as always. Thanks so much for the discourse, and in discussion here. questions and whatnot. Again, guys, the Fed doesn't know for sure that what it's doing is going to work. I don't know for sure that what I'm saying is going to happen. The best we can do is look at things based on how things normally work and expansions and expectations from credit. Because at the end of the day, that's what it's all about right now, guys. It's all about a debt-based economy and a credit cycle, which may be at its end. And if the credit cycle is at its end, there's nothing that's going to happen that can keep it from having a detrimental effect on the economy. It's heavy correcting. So that's where we're at, guys. All right? Until that point, like I said, guys, the trend is your friend until the end. Continue looking for reason to go upside until price gives you a reason to look to the downside, right? There you go. You guys have a great day. Thanks so much. I will catch y'all on Wednesday, all right? Y'all take care. Remember, the only thing you control in the market is how much you lose. That's it. Take care.